Let us see the next question. A large profit making company. I request you to highlight the portion large profit making company. Dear students, we have to understand the term large profit making company stands for a company which has already profit in the existing ventures, and if at all it is going to take up any additional venture, and if at all it has losses in the initial years, then those losses will be set off against, say, the existing venture. That is what it says, and will get the tax saving advantage immediately. Is considering installation of a machinery to process the waste produced by one of its existing manufacturing process to be converted into marketable product. So we are manufacturing a product, and in the processing of that product we are having, say, certain wastage. We are considering that, say, to convert it into marketable product. At present the waste is removed by the contractor for disposal on payment by the company rupees 150 lakhs per annum for the next 4 years. Right now we are having an arrangement wherein whatever the waste which is generated, so that waste is removed from the factory, and say for the removing of the wastage from the factory we are paying an amount of 150 lakhs on per annum basis. The contract can be terminated, so we can close the contract upon installation of the aforesaid machine on payment of compensation of rupees 90 lakhs before the processing operation starts. So since we want to further process a wastage, we want to further process and we want to convert this into a marketable product. So what happens that, say, we have to cancel this contract. When we call the contractor that, say, we want to cancel the contract, then in that case he will tell us that you have to pay an amount of 90 lakhs to me in form of compensation if at all you cancel the contract before the processing operation starts, means in the year 0. Try to understand, friends. The question is providing the information that say, if at all we cancel this contract we have to pay 90 lakhs, not otherwise. Basically what happens that, say, at the time of giving the contract to the contractor, he may be demanding the higher price. However, we had a negotiation with him that we are going to give you business for a longer time period. Since we are cancelling the contract in between, so he reminds us that you have to pay a compensation to me, because you had given a commitment that if at all you cancel the contract in between, then you will pay a compensation. So this is required to be paid only if at all we cancel the contract. A very good clarification is made. This compensation is not allowed as a deduction for income tax purpose. The machinery required for carrying out the processing will cost 600 lakhs. At the end of the 4th year, the machinery can be sold for 60 lakhs. And the cost of dismantling and removal will be 45 lakhs. In short, we will get an amount of 15 lakhs at the end of 4th year. How 15 lakhs is calculated? 60 minus 45. Sales and the direct cost of the product emerging from the waste processing for 4 years are as under. So information is provided to us regarding the sales revenue starting from end of year 1 to end of year 4. Material consumption is given, wages is given, other expenses are given, factory overhead is given, and depreciation is given as per income tax rules. The question says that initial stock of the material required before commencement of the processing operation is 60 lakhs. Dear students, the term initial stock stands for the requirement of the stock in the year 0. before the commencement of the processing operation, it has again a meaning that set is required in the year 0. At the start of year 1 means again it is provided in the year 0. Similarly friends, over here this 90 lakhs is required to be paid before the processing operation starts. It has a meaning that it is required to be paid in the year 0. That is what we understand. Stock level of the material to be maintained at the end of the first year, second year and third year will be 165 lakhs, and stock at the end of the year 4 will be 0. Storage of material will utilize the space. Highlight the portion which would otherwise have been rented out for 30 lakhs per annum. So we could have rented out the premises, say for an amount of 30 lakhs per annum. The space which we are going to use to store the raw material. Labor costs include wages of 40 workers whose transfer to this process will reduce. Highlight the portion idle time, payment of 45 lakhs in year 1 and 30 lakhs in year 2. Factory overhead includes apportionment of the general factory overhead, except to the extent of the insurance charges of 90 lakhs per annum payable on this venture. Income tax rate is given 30%, that's fine. Discounting rate is 14%. Present value factors have been given starting from end of year 1 to end of year 4. Advise the management of the desirability of installing the machinery for processing the waste. All calculations should form part of your answer. Please go through the question, all of you. I want you to tell me that what would be investment in year 0. Please write answer in the chat box. So I request all of you to write an answer. Step number 1, investment. Dear students, we are preparing a small working note over here. Working note number 1, calculation of working capital change. In that, column number 1 is year, column number 2 is stock. Stock itself is a working capital because there are no other debtors, debtors or creditors information is given. So the next column would be working capital change. I request you to write an answer along with me. Year 0, first year, second year, third year and fourth year. That is the way we are required to show the working capital. It has been given to us initial stock of the material required before the processing operation starts, 60 lakhs at the start of year 1. Like that information is given. So friends, it is required 60 lakhs at the start of year 1. So I am writing over here 60. Further, it has been given that say from first year end to third year end it will be 165 lakhs and last year it will be 0. So end of year 1 165 lakhs, end of year 2 again 165 lakhs, end of year 3 165 lakhs, fourth year it will be 0. So it is 60 lakhs cash outflow in year 0, 105 cash outflow at the end of first year, no change in the second year, no change in the third year, 165 lakhs is inflow at the end of the fourth year. This is the way we are required to show the working capital change. Dear students, as what we do normally, this will be shown as cash outflow in step number 1. The current step which is going on, in that it will be shown as cash outflow. Whatever these cash flows that we have, adjustment for all of them will be shown in step number 3. Step number 4. and last one will be shown in step number 3. This is what we are required to show. Step number 2, depreciation. In that, column number 1 is year, column number 2 is opening WDV, third column is depreciation. First year, second year, third year and fourth year. Dear students, we have been provided that's the 600 lakhs. Oh, I'm sorry. Step number 1 is pending. I'm sorry. This is only a working note that we have prepared. Now, calculation of investment. Dear students, in case of investment, we are required to show purchase of machinery to process the waste 600 lakhs plus we are required to show working capital investment it is an amount of 60 lakhs plus compensation which is required to be paid in the year 0. It is an amount of rupees 90 lakhs. Because the compensation is required to be paid before the processing operation starts. So the amount of the investment in the year 0 is 750 lakhs. So I request you to take down answer. Step number 1, investment is 750 lakhs. Step number 2, depreciation. Dear students, we understand that say as far as the depreciation is concerned, it has been provided to us ready-made in the question. This is the depreciation. And the language of the question speaks very clearly. It is as per income tax rule. So for the first year it is 150, second year it is 114, third year is 84 lakhs, and for the last year it would be an amount of 100, that is say 63 lakhs. This is the way we can compute the depreciation amount. Write down answer along with me. First year, second year, third year and fourth year. Depreciation 150 lakhs, 114 lakhs, 84 lakhs and 63 lakhs. Rather than that, provided in the question. I request you to write answer for the step number 3, terminal cash flow. Put answer in the chat box. Step number 3, terminal cash flow. That will be received year 4 end. I request you to put your answer in the chat box for the terminal cash flow. I request all of you to write down answer along with me. Working note number 1, calculation of capital gain or loss on sale of machinery. So in that we will show sale value of machine 60 lakhs minus 45 lakhs, that comes to an amount of 15 lakhs. Because we can see that so the question is providing the information Let's say the machinery can be sold for an amount of 60 lakhs, but the cost of dismantling and removal will be 45 lakhs. So net amount that we are going to receive is 15 lakhs less written down value. We understand that so the question is providing 600 lakhs is the price at which we had purchased the machinery. First year depreciation is 150 lakhs. Second year 114 lakhs. Third year 84 lakhs. And fourth year it is 63 lakhs. So over here 600 minus 150 minus 114 minus 84 minus 63. So it comes to 189 lakhs. From the sale value of the machinery, WDV will be deducted to compute the capital loss. Language of the question has already been clarified that whatever the capital gain or loss that we have, for that we'll get the tax saving. Why? Because it is a large profit making company. So capital loss is 174 lakhs. Income tax rate is 30%. So we have capital loss tax savings. That is an amount of 174 lakhs into 30%. So into 0.3, 52 lakh 20,000. This is the capital loss, gain or loss on sale of machinery and its tax effect. Please write down answer. Now write down heading terminal cash flow. Terminal cash flow is going to be received year 4 end. In that case, we will show sale value of machinery. What is the sale value of machinery? We understand that it's the 60 lakhs minus 45 lakhs. Because friends, we understand that the cost of dismantling, that is removal, is the expense to be paid out of the sale value that we receive. So it is an amount of 15 lakhs. Plus, we understand that there is a working capital recovery. In step number 1, we already have found at the end of the 4th year, stock level will be 0. So there is a cash inflow of 165 lakhs. So it is 165 lakhs is further cash inflow. Plus capital loss tax savings. What is the capital loss tax savings? 52 lakh 20,000. Okay. So we understand 165 plus 15 plus 52.2. That is 232.2 lakhs. So this is the terminal cash flow which we are going to receive at the end of 4th year. Please take an answer. Step number 4. Calculation of recurring cash flow. I request you to write answer in the chat box that what would be the year 1 cash inflow. Just year 1 cash inflow. Please write answer in the chat box. So friends, first of all, we will mention over here for the purpose of recurring cash flow the sales value. The sales value is provided to us. For year 1 it is 966 lakhs. The next is a direct material consumption 90 lakhs. So direct material cost 90 lakhs. I want somebody of you to write in the chat box what would be the year one direct wages that we are required to show in calculation. Only year one direct wages. Please write answer in the chat box. Friends, over here information is provided to us like this. Labor costs include the wages of 40 workers whose transfer to this process will reduce idle time payment of 45 lakhs in year one. See, we have to understand it like this. Presently we are having, let us say, manufacturing of a product. Maybe demand of that product has gone down in the market. So there are a number of workers who come in that factory. They sign the register in the morning, they go back in the evening without any work. So it is the idle time that we have. Now we are considering further processing of the wastage. So these workers will be told that, say, you come and you work over here. See, basically we may not be able to retrench them, either because of the reason that the labor union is very strict. If at all we retrench them, then in that case they will stop the entire factory work. And the second reason may be, listen carefully, that they are skilled workers. So we may find shortage of these kind of skilled workers later on when we will have the work. So basically what we are doing, so we are transferring them to this new project. Whatever the total number of the workers who are going to work, that includes wages of these 40 workers. And this wages we would have paid even otherwise. So this 225 includes this 45. So the language of the question speaks very clearly. It includes, like that information is given. So we understand that, say, we are required to consider only the incremental wages. So we are required to mention over here direct wages. It is 225 minus 45. That comes to 180. That is the direct wages cost for the first year. For other expenses, so there is no like adjustment. So it will be 120 itself. So we will mention other expenses. It is an amount of 120. Next is factory overhead. Again, I request any of you to write in the chat box that what amount I should mention for the factory overhead. Please write answer in the chat box. Dear students, over here the question says that, listen me carefully, factory overhead includes apportionment of the general factory overhead. We know that, say, any allocation, absorption, charge or recovery of overhead is irrelevant. It is not an incremental cost. Except means something is not incremental. How much? To the extent of the insurance charges of 90 lakhs per annum payable on this venture. So we understand that, say, this 90 lakhs is not the incremental cost, like that information is given. I'm sorry, this 90 lakhs is incremental cost and it is not the apportionment. Factory overhead includes the apportionment. When I read the word apportionment, suddenly I understand that it is irrelevant. Except means something is not apportionment. How much? An amount of 90 lakhs. So friends, over here we are required to mention the factory overhead an amount of 90 lakhs. That is what we understand. Okay. Now depreciation already provided from income tax point of view, that is 150 lakhs. That is what provided to us directly in the example. Yes, apart from this, is there anything else I should mention? Please write in the chat box. Friends, over here, the question is providing the information like this, that the storage of material will utilize the space which would otherwise have been rented out. Means opportunity cost information is given. So what happens at, say, we have to incorporate the rental income forgone. rental income forgone, that will be considered as cash outflow, that is 30 lakhs. Apart from this, should I mention anything else? Please write in the chat box. Now friends, we understand that say the question is providing that say right now we are having an arrangement in which we pay 150 lakhs for the disposal of the payment, in a way that say the presently waste is removed, and whatever the waste removal cost that we are incurring, that will not be incurred in future. So we will be having, listen carefully, savings of waste removal cost, an amount of 150 lakhs. Then we will mention friends profit before taxes, then income tax, then profit after taxes, then add back depreciation to compute CFAT. This is what say we do normally. Then we are required to show working capital change, working capital investment. Dear students, we already have calculated. End of year 1, we are required to invest in the working capital an amount of 105 lakhs. So that will be considered as cash outflow at the end of first year. And based on that, we will have the net cash flow. Whatever the net cash flow that we have on yearly basis, to that terminal cash flow is added to make the calculation of NPV. I request you to write down answer for year 1, and from second year onwards, put your answer in the chat box. So friends, over here, it is 966 minus 90 minus 180 minus 120 minus 90 minus 150 minus 30 plus 150. So it is 456. Income tax rate is 30%. So 136.8. That is deducted from 456. So 319.2. Depreciation is added back 150. So 469.2. Minus 105. So 364.2. This is of year 1. Try to do answer for the second year and put your answer in the chat box. For the second year, the sales revenue is same, 966. Direct material cost is 120. Language of the question is again very clear, that it includes the wages of the 40 workers whose transfer to this process will reduce the idle time payment of 45 lakhs in year 1 and 30 lakhs in the second year. So over here we understand that the wages is 225. From 225 we will deduct the second year idle time wages. So 225 minus 30, that is 195. And 120 are deducted from 966. Okay. Other expenses are provided to us 135. Factory overhead, only insurance charges of 90 lakhs friends. Depreciation will be 114. Rental income forgone will be same. Savings of the waste removal cost same. Accordingly, we will calculate the answer. So 966 minus 120 minus 195 minus 135 minus 90 minus 114 minus 30 plus 150, that comes to 432 into 0.3, 129.6. It is deducted from 432, so 302.4 plus depreciation. Amount of depreciation is 114. So 416.4. That is the second year cash accrual. Third year, it is an amount of 1254. Next, material consumption 255. Dear students, third year onwards, that the direct wages will be shown as it is, because only for the first and second year, say they have provided this adjustment. So from the third year onwards, we'll show the wages entirely. So it is 255. Next is other expenses 162. Factorial at 90. Depreciation is 84. Rental income forgone is 30. Savings of waste removal expenses 150. So 1254 minus 255 minus 255 minus 162 minus 90 minus 84 minus 30 plus 150 is 528 into 0.30, so 158.4. It is subtracted from 528, so 369.6. Add back depreciation 84, so 453.6. 453.6. Fourth year end, same revenue, same direct material consumption. Direct wages is 300. 1254 minus 255 minus 300. Other expenses 210. So minus 210. Amount of factorial is 90. Depreciation is 63. Rental income forgone is 30. Next is savings of waste removal cost is 150. So 1254 minus 255 minus 300 minus 210 minus 90 minus 63 minus 30 plus 150, so 456 into 0.3, so 136.8. So profit after taxes is 319.2 plus 63, so 382.2. Okay. So now this is what's the recurring cash flow that we have from end of year 1 to end of year 4. The last step would be simple NPV calculation. Step number 5, NPV. First year, second year, third year and fourth year. Cash flows. 364.2 positive, 416.4 positive, 453.6 positive, 382.2 positive, plus the amount of the terminal cash flow is 232.2. So it is 614.4. Discounting factor at 14%. First year factor is 877. Second year it is 769. Third year it is 674. Fourth year it is 592. Next is present value. 364.4, sorry, 2 into 0.877. So 319.40. 416.4 into 0.769. So 320.21. 453.6 into 0.674. So 305.73. 614.4 into 0.592. 363.72. That will give us present value of the cash inflow. 319.4 plus 320.21 plus 305.73 plus 363.72. So it is 1309.06. Amount of investment is 750 lakhs. That is computed in step number 1. That is in form of the working capital, purchase of the machinery and the compensation. That comes to an amount of 750 lakhs. Okay, now we'll make the calculation of NPV. So minus 750, that comes to 559.06. So we can say that since NPV is positive, the company should further process the waste. Please write an answer. The company is advised to further process the waste. So friends, entire summary of the answer. We are required to take a decision that say in the process of manufacturing of a product, whatever the waste is generated, should we further process the same or not? In step number 1, we compute the investment. This time there is a new point, that information is given about the working capital investment. We understand that say we are having the additional investment in the working capital at the end of the first year, and we will be able to recover the same at the end of the fourth year. Year 0, that is very simple, purchase of the machinery, working capital investment is outflow, compensation is again cash outflow. Depreciation, year 1 to year 4 directly provided to us an example. In step number 3, we have the terminal cash flow. In terminal cash flow, first of all, the capital gain or loss on sale of machinery, that is the sale value is compared with the WDV. That is a capital loss, and we'll get the tax saving because the language of the question speaks very clearly that it is a large profit making company. Terminal cash flow, in that sale value of the machinery 15 lakhs plus working capital recovery 165 lakhs. Then capital loss tax saving is cash inflow, so 232.2 lakhs. Step number 4 is recurring cash flow. Sales, direct material cost, direct wages, we will show only the incremental expenses, means excluding the cost of the idle time payment. Other expenses as it is. Factory overhead, in that we will write only the expenses which is out of pocket. Any allocation or absorption will be ignored. Depreciation is provided to us. Importantly, the opportunity cost information is given. The rental income that we could have received it will be considered as cash outflow. Importantly, friends, it is required to be shown before tax calculation. Savings of waste removal cost, it is again cash inflow. Importantly, friends, both of them are required to be shown before income tax calculation because they are subject to tax. You make it post tax, you add back depreciation, CFAT, end of year 1 working capital investment, and based on that, so the NPV is calculated. Since NPV is positive, we have advised the company that say you should further process the waste. I request you to write down a small note for the answer. First point, in this question, we are adopting incremental approach for decision making. Full stop. Incremental approach is further process the waste instead of removing the same. Second point, importantly, there will be a savings of waste removal cost, comma, which would have been paid otherwise, comma, it is cash inflow. Being rental income forgone is cash outflow, comma, being opportunity cost. Full stop. C, in case of wages, comma, we only have to consider out of pocket expenses, that is excluding idle time wages, idle time wages, comma, which would have been paid even otherwise. Full stop. No information for other expenses, comma, it is and incremental expense. Full stop. E. Any allocation, comma, absorption, comma, charge or recovery of overhead is irrelevant. So, for factory overhead, we have considered only insurance charges as cash outflow. This is what we understand.